So just recently, the IRS made a really big announcement. They are lifting the moratorium on the employee retention credit. So in case this is news to you, about 9 months ago, back in September of 2023, the IRS put in place an immediate halt to processing any new ERC or employee retention claims. And at the time, the IRS said, well, there's too much fraud in the system. We're not able to determine who's eligible, who's not. So we're just not going to process any more claims. And so initially they said that was going to take, they're going to be on pause until the end of the year, end of last year, 2023. And the year came around and said, well, we're going to be in pause through January. And they kept kicking the can down the road. And they said, we're going to be on pause until springtime. And then it's going to be the end of spring. And then finally, quite literally on the first day of summer, the IRS had to put a press release out saying that they were lifting the moratorium. So immediately my team goes, hey, Brad, you see the big news? And I said, yeah. And it's interesting, although I'm not necessarily cheering the lifting, but I wanted to go through and talk about some of the highlights from the press release, because I think it shares a lot about how the IRS is thinking about the ERC claims and how they are going to be enforcing and auditing ERC claims going forward. So the first thing that caught my attention, the IRS talked about, it's here to protect taxpayers, and it really put the moratorium in place to protect taxpayers, all protect the taxpayers. So, which I kind of chuckle at, because it's kind of like the old Reagan quote that the 9 most terrifying words in the English language are, I'm from the government and I'm here to help. And so there's a bit of irony in that, but what that said, there's some really interesting numbers that the IRS shared in that press release, and about this analysis of claims they've done and how they're categorizing the claims. And so they said that approximately 10 to 20% are what they call high risk, clearly erroneous claims. And then about 60 to 70% are claims they consider to have an unacceptable level of risk that they need to review and audit to get additional information on. So, and then there's 10 to 20% that they consider low risk claims. And so I thought that was an interesting breakdown, because it very much forms a bell curve. And so it was very round numbers on both sides. And so I thought it was interesting, because the claims that they say are clearly erroneous, I might characterize differently, as I would say they're clearly fraudulent, right? The IRS has found tens of thousands of these claims, right? Back in December, there was 20,000 plus. So there are going to be tens of thousands more that they identify as clearly erroneous and automatically reject. And so these are things like companies that weren't even in existence during COVID. These are things like companies that didn't have employees during COVID, during the eligible period. And so blatantly fraudulent or erroneous, as they say, claims. To me, those are the ones that I'd be focusing on. And those are the folks who were filing those claims and the promoters who were filing those claims. If it was me, I'd be going after those guys. So that's the high risk. But then I thought it was really interesting to say 60 to 70% of all claims had an unacceptable level of risk. And I thought, wow, that's a very strong statement. The IRS has 1.4 million ERC claims pending. So to say that 70% of those 1.4 claims that are pending have some sort of serious unacceptable level of risk, I thought was really very illustrative in terms of how the agency is thinking about that. And, having worked with many clients ourselves, we'd be shocked to see that if somebody came to us and 70% of your clients have an unacceptable level of risk. Now, obviously, we went through a lot of diligence before we filed for these, but having spoken with other advisors who advised on the ERC, not everybody did, but a lot of them did. And so I thought it was very interesting, 10 to 20% low risk. And so thinking about that, really what that breaks down into, in my opinion, I suspect, I don't know this, but probably 10 to 20% of the claims are relying on qualification on what's called a gross receipts test, which is a very black and white qualification of the ERC. And so the gross receipts test is very straightforward. It's very easy for the agency to administer and to be able to determine yes or no. It's, like I said, it's black and white. It's yes or no. And the other 60 to 70%, I suspect, likely relied on some sort of partial suspension test, which is really where all the words and regulations and text and, frankly, the controversy will likely arise from. And there's a lot of rules around what is and is not what's called a full or partial suspension of business operations. However, based off the rules, they're called the notices that the IRS put out there, the notices put a relatively low bar on what is and is not considered a partial suspension of operations. And so I suspect that the agency here is really focusing on on perhaps the lack of documentation and lack of supporting documentary evidence to support a taxpayer's position. So it'll be interesting to see, but I suspect that that's where a lot of the review is going to be. And then, of course, that 20% that are clearly erroneous. The IRS did in the press release talk about there's been 7 billion fraudulent claims identified. There's been multiple criminal charges filed with an average sentence of 25 months. And, these are really, folks who are just really, truly engaged in outright fraud and defrauding the United States government. And we certainly want to attack those folks. Well, maybe attack's not the right word, but we want to prosecute those folks because we want a healthy functioning tax system, and it's not designed for people to take advantage of and fraudulently misrepresent information, like saying I'm eligible for a tax credit when I wasn't even in existence at the time the tax credit was put in place. So with all that said, it's a lot of detail, but I thought that was very interesting how they broke down how they're looking at it. A lot of detail. The agency does want to start issuing checks, but they said we're not even going to issue checks until at the earliest late summer. So again, the IRS is continuing to kick the can down the road. At late summer, if we go by when they said late spring, that probably actually means fall. And they said that when they do start issuing checks, it's going to be on a very slow, measured basis. So again, the IRS is trying to stretch this out as long as possible. Part of it has to do with manpower issues. Part of it has to do with just this is a complex credit. And part of it has to do with a lot of the qualifications are somewhat subjective in nature. They require an evaluation of all the facts and circumstances, and those claims take a long time to adjudicate and review and determine and establish the merits of those cases. A lot going on here. So there's more in the press release, and I'll do a separate video on this talking about, other programs, but wanted to get that out there, share it with you because I think it's really important just to understand how the agency is thinking about this, and particularly ensuring that you have appropriate documentation to support the position that you or your clients have taken. So any questions at all, feel free to ping me. Love to help. Thanks.